Hey there, good morning. It's Trisha with Easy E-mini Trade, and today I'm going to show you another little tip or trick, and then I'll also show you some of the Kijun line setups from yesterday. What is today? Thursday, so yesterday, Wednesday. So on Wednesday, the 22nd at 4 o'clock, I'll be doing a webinar. I'm going to cover a bunch of little things, but they're all little things that will help in your trading no matter what setup or chart style, etc. you use or instrument that you like to trade. So it won't really matter. It'll be helpful on all of them. So some of the things I'll go over is how to use our double stochastics for clues in the market for like pullbacks, also how to spot divergence, and how to actually find support and resistance areas using the volume profile, because divergence is very helpful, but only in my opinion, in reference to them setting up at support or resistance areas. And same for the expectation of pullbacks using the double stochastic. And then I'm going to go over the Kijun line entry setup. Kijun line is part of the Ichimoku components. I did a webinar on Ichimoku last month, but this setup I did not include. I had needed to do some more testing on it. So anyway, I'll also share last month's webinar if you sign up for this month's on the 22nd. So this way you'll have the basics of the Ichimoku, so you'll understand a lot more once I introduce the Kijun line. Okay, so let's get started. Let me show you some stuff. All right, so let's see, what do I bring up here? I have NQ on an 8 range, and so here's my double stochastic down here, and so it's the same stochastics that we use for the Slinky setup and the 1-minute setup, and I'll go over all those settings during the webinar on Wednesday the 22nd, so no worries. But whenever we get, and I'm using Gordon's indicator on the stochastic, so it'll plot my stochastics for me, and it'll put these little arrows when I'm getting close to like an opening here at 40 points, and then it marks what direction I'm looking for my trades, based on the setups that I trade. But you can make use of this whether you use Gordon's indicators or not. But anyway, so anytime we get like a 40-point gapper, that's what we call it, between the green stochastic line and that red stochastic line, it's usually a heads up that price is going to stall and or retrace. So in this case, unless you have a very fast volatile market, generally what's going to happen when you see that 40-point gap is that, like I said, price is going to go sideways, as you can see up here, or the price will move in whatever direction the green line has to in order to find its way up to the red. So those are the two things that generally can happen when you see that. So in this case, you can see, and this is pre-market, that's like 3:30 this morning my time. So you can see it goes sideways here while it fills up that space. So how that's helpful to have basically a heads up for that is if you were short, let's say, you could tighten your stop or take some profits off. Or if you were looking to take a short and you saw that, you might want to hold off. Doesn't mean that it's going to roll over completely, like basically in this case, change direction and take off higher in a big way. It just means that before it goes, if it's going to go lower, before that happens, it's likely going to go sideways or bounce. Okay, so here, and this is again pre-market. I'll go back to regular trading hours from yesterday, but here you could see 40-point gapper, price stalls and then bounces. Right here, well, we'll go here, 40-point gapper, stalls and pulls back. Here, 40-point gapper, stalls and bounces. So let's say, so this is a round number area on NQ 9100. So let's say that you know that this is an area of resistance and support. It is, because you could see support back here, resistance here, resistance here. So, and then looking back at, if you know anything about NQ, you know generally it will react in the round number area. So let's just say that you saw this and you wanted to take a short as it retraced up to the 9100. Here we don't have a 40-point gapper, but we do have divergence. You can see here slightly, we've got higher high here, then here. While looking at my green line, I have a lower high here than here. So that's a heads up that it's going to pull back. So if you determined that there was enough room for this to pull back from this resistance area down to support, you could take that as a short, anticipating, down to support. And then of course, if you break support area, then you're looking down to the next support area. Up here, you can see that you get your 40-point gapper right here. No divergence, but this area has been holding, so if you wanted to attempt to short off that area, once again with that 40-point gapper, you could. So it's not like you're going to jump in long when you see a 40-point gapper telling you it's going to go to the upside, unless it's at a support area, for example, right? Here, 40-point gapper, this is a support area here because you could see it back here, so you could decide to buy this here, right? And you can use a fairly tight stop. If price is in a range and you're buying support, you can put your stop just under the support area. If you're shorting resistance, you could put your stop above the resistance area. Here, no 40-point gapper here to the upside or either side, but this area of support, you could see it holding and holding and holding, and then you notice that it gives you some divergence as it's attempting that area. So once again, if you want to buy that and anticipate it trading up to resistance, perfect. And this will work on any instrument on any size chart. So here's a different view. This is NQ on a 1-minute chart. So 1-minute chart, and again, it's pre-market, so not likely you're doing much with NQ at this time, but it doesn't matter the time of day. You can use it anytime on any instrument, as I've said numerous times. So here, 40-point gapper, and the larger the chart, the more likely that it's going to go sideways to fill that space. So just keep that in mind. So here, 40-point gapper on the 1-minute, going sideways here, holding. I know it's probably a little hard to see through my volume profile, but this is fair value area high up here that's been holding. And then up here, 40-point gapper, right? Price pulls back to fill that space. Here, 40-point gapper, price goes sideways to fill that space. So where it's also helpful is if you're looking to take a pullback. Let me look at the 8 range and see if I can find a pullback for you. All right, this is still pre-market. This is back on the 8 range on NQ, but good for this explanation anyway, example. So you can see price moving higher here. So let's say you're trying to find a way to get in a moving market, and you can see here, price is moving higher. And you can see price pulls back here, and as it pulls back, you can see that you get this 40-point gapper here. So as long as this pulls back to a reference area that you like to use, like such as a support area in this case because we're moving higher, pull back to a support area, or if you use a moving average, that would be ideal for taking a pullback. Price is pulling back, you get your 40-point gapper here. So worst case, it goes sideways. Well, worst case, you get stopped out, but in reference to the 40-point gapper, it either is going to go sideways or likely price will move higher to fill up this space, right? Because what direction does that green line have to move to find its way to the red? Up. So that means price is likely to move up. Now, I may have mentioned this, I think I did, but if it's a very volatile market, the red line can find its way to the green, but typically it's the green finding its way to the red line to give you the heads up of what direction price will move to fill up that space, because that's the faster of the two lines. And let's just quickly look at the Kijun line setup. All right, so this is the NQ still on a 1-minute chart, and the Kijun line is the dark purple one here, and we're using the same double stochastics for the filter on that. And if you're not familiar with the Ichimoku, no worries. If you sign up for next week's webinar, like I said, I'm going to share that for you guys that don't have it, because I won't go over this in great detail again during this webinar that I'll do on Wednesday, next Wednesday, because I want to spend the time going over this new setup. But you will get everything that you need in order to learn the Ichimoku, I promise. All right, so this is the Kijun line right here. So what we would be looking for is we'd be looking for a close below that Kijun line with our stochastic in agreement. Now anything that you do, and again this is still pre-market you guys, but still as always, anything you do into the cloud is basically neutral. So generally you're going to stay away from anything that's happening in the cloud. Or let's say here, for example, you get closed below that Kijun line right here, this purple one. I'll just mark it real quick. So if you wanted to take that, you would use the cloud area as your target, right? Because you're going against the cloud. Generally, when price is above the cloud, you're looking for buys. When price is below the clouds, you're looking for shorts. So if you're going against the cloud, then you're going to use the cloud as your target area. Okay, so this one here, I mean, technically it's setting up. Not sure that much will materialize out of it, but you would look to enter in under the low of the bar that closes below that Kijun line. So you're looking at 94 and a quarter, and I would look to want to be filled on the very next bar, or I would pass on it. So like for example, this bar here, by the time this closes, if it doesn't trigger your order one tick under this candle, then I would cancel. All right, so let's just look back real quick at some of these from yesterday. All right, so I'll just do just a quick run through, and this is a 1 minute chart. You can use any chart you want, tick chart, range chart. So this one here, closing below that Kijun line, this is in line because our green line's under the red and we're not in overbought with our red line, but this is literally into the previous day's close. Let's say you wanted to take it anyway. If you put your order in a tick below the low of this bar, it would be 61.75. Would have never triggered you on this next bar, so you'd cancel. Now, if you were looking at this on a smaller chart, you know, you may anticipate a bounce off this area to buy, but just based on this Kijun line that we're talking about, nothing to do here. Next close above or below we get closed above here, but we're not in line here for the buy. Technically, if you want to be aggressive, yes, but that'll be a story for another day. Here we get closed below, and keep in mind we're still above the cloud, so technically any short that you take using this Kijun line, that cloud's going to be your target area, right, or your next support. So here you get closed below. Now this one I would pass on because we got our 40-point gapper, so this is giving us a heads up that price is likely going to bounce. So even though it's in line for this short, this is telling us price is probably going to bounce first. Even if you placed your order under this candle, it would have never triggered you on the next bar, so you cancel. We get closed above right here. This is not in line for the buy, so pass. And then here we do get closed below right here, and that is in line. So we filled up our space. It's like borderline there, so if you want to wait for the next bar, the space is cleared up here, basically closed up I should say. You short under this candle and you're using the cloud as your possible target area. Here you get closed above Kijun line right here, green line above the red, good for the buy. Here closed below, technically valid for the short, but you cannot ignore that the cloud is right there, so you'd have to determine if there's enough space for you to try that. If the cloud gets very narrow like this, then basically very sideways market, and you're going to want to be very aware of the areas that you're taking your trades in the way of support and resistance other than just the cloud. All right, you guys, so I'll go over into that more detail on Wednesday, but it's shaping up to be a really awesome, an awesome setup, really. So here, this would have never triggered, I don't think. Let's see, this is the one we were just looking at real time, 94 and a quarter, 94.50. So this one wouldn't have triggered, closes back above, the buy's not valid. Then you get this hitting yesterday's high, closing below. At that point, we don't have the 40-point gapper yet, so likely we jump in there, and you know, once you're in, then you wind up with the 40-point gapper as it's breaking all the this support here and trading back down to this support here. All right, you guys, have a great day. If you want more info on the webinar, go to easy-trade.com and click on the upcoming webinar tab. I promise you'll walk away with a lot of information that you will find very useful no matter what you're trading. Okay, you guys, have a great day.